The Wuhan coronavirus has already spread to every region in China. Investing when other people are selling, you are technically helping to stabilize the market. 20% for Facebook for the next 5 years. How you doing, guys? It's Damien here. I'm sure you all heard about the outbreak of coronavirus in China and its spread across the world. The Wuhan coronavirus has already spread to every region in China. Some companies have warned that a coronavirus outbreak in China that has killed more than 300 people and infected thousands could disrupt supply chains or hurt bottom lines as factories and shops shut and airlines suspend flights. The Chinese officials decided to extend the holiday break for the people to limit their meetings and the possibility of being infected. Beijing has quarantined a large part of the country. Travel-related stocks such as airlines and casinos are down. This interactive map presents current information about the spread of the virus. There are currently confirmed more than 13,000 people infected, mostly in China, and 305 dead. But there are many YouTube channels which show the situation in China. On this channel, let's think which companies' earnings can be affected by this situation. As the virus spreads, it scares people, and it scares investors too, who estimate how it can affect the earnings of companies. The whole situation can cause a slowdown in the Chinese economy. People are forced not to work. Companies are not producing. People are not going out. In this episode of Stocks to Buy Now series, I will talk about the best choice of companies which should not be affected by the spread of the coronavirus. And remember that by investing when other people are selling, you are technically helping to stabilize the market. So it actually has a positive effect. Nobody is better off when you don't. I started the Stocks to Buy Now series in October 2019. I have been giving my Stocks to Buy Now choices each month before the first session of the month. So let's see how I have been doing the last month. It has been another great month for my stock market portfolio and my choices for Stocks to Buy Now series. The average return was 2.78% versus the benchmark for the S&P 500 index going down 0.16%. So it was another month of beating the index. Focusing on a smaller selection of companies works for me. It also allows me to know the companies better. The frequent changes are not needed if I select the best companies from the respective stock markets. Wide diversification means that you do not know what you are doing. All my choices are tech companies. There were only 5 companies, and after 4 months of this experiment, my Stocks to Buy Now portfolio is up 20.87% versus only 8.35% for the S&P 500 index. Smash that like button for the YouTube algorithm. It will help reach more people and will encourage me to give you more useful content. First, let's look at the exposure to the United States companies. Facebook went down by 1.63%, and Alphabet, which is a parent company of Google, increased by 6.97%. Next, there are my choices from emerging markets. Projekt Red went up by 0.75%, and 11-bit Studios went up by 8%. If you were following this channel, you know that I bought shares of Projekt Red after the negative news about moving the date of the release of its highly anticipated game, Cyberpunk 2077. There was panic on the market, but I used it to my advantage, and I am up already more than 10% with the new positions. Watch this video to get more details on the trades I made on the shares of this company. As you could see, the results of choices for January 2020 were mixed, but there was no company which disappointed me. To be honest, I am surprised by such a good performance of Tencent, taking into account the coronavirus outbreak in China. Let's think which sectors and stocks can be affected by the coronavirus the most. The first sector, which sounds obvious, is tourism. The multi-billion-dollar industry during the Lunar New Year has been decimated as the government quarantines major population centers. The earnings of major travel companies, hotels, airlines, and cruise ships will be affected by people avoiding traveling for fear of becoming infected. Majority of airlines have already suspended services to and from China. Next sector is entertainment. Cinemas and entertainment parks have been closed in China. Walt Disney shut its resorts and theme parks in Shanghai and Hong Kong. Retailers operating in China have suspended their businesses. McDonald's has already suspended business in some areas of China. Apple management informed on Saturday that it would shut all of its official stores and corporate offices in mainland China until February the 9th. Fashion retailers like Nike have already experienced a reduction in its share price. Other companies at risk are producers with supply chains in China. For example, the Apple company has lost production from suppliers in Wuhan. The latest efforts of Apple company to move part of its production into India was a good move, which allows spreading the manufacture of its devices among countries. Tesla warned that a 1 to 1.5 week delay in the ramp of Shanghai-built Model 3 cars could slightly hurt March quarter profit after China ordered a shutdown of the factory. Tesla is also evaluating whether the supply chain for cars built in its California plant will be affected. At least in 21 provinces in China, businesses will not resume work before February the 10th at the earliest. We may have already reached the bottom of this correction in the stock market prices. Nobody knows that, but potentially it is a good idea to look for companies which business should not be affected by a coronavirus. Okay, so we know which sectors can be affected by a coronavirus. Before thinking about sectors which are a good choice for February 2020, let's ask how the overall US stock market performed during the past viral outbreaks. The MarketWatch website provides the answer to that question. Historically, Wall Street's reaction to such outbreaks and spreading diseases was not significant and short-lived. The S&P 500 increased 14.59% during the 6 months after the first occurrence of SARS back in 2002-2003. 12 months after that point, the S&P 500 index was up 20.76%. Of course, the valuation of the market could have been the primary reason for the increase in share prices. Also, the performance of the market after similar viral outbreaks in the past doesn't mean that it will be the case this time. Definitely, retailers and tourism are not good choices. A lot of people in China stay at home and reduce the unnecessary risk of catching the virus from meeting people outside of their apartments. Also, many offices and factories have been closed down or people are asked to work from home. I have been talking with my friend who lives in Shanghai. He told me that many people are bored and knowing that being outside might be risky, they spend time with online entertainment. With the popularity of video games in China, the gaming industry seems to be the obvious choice as the companies which might benefit from this situation. My preferred gaming companies are Projekt Red and 11-bit Studios. These are Polish video game companies. I like these companies because the majority of their revenues come from abroad. Thanks to being based in Poland, the salaries of game developers and programmers are on a much lower level. Average salaries of a software developer or game designer are 3 to 3.5 times higher in New York than in Warsaw, the capital of Poland, where the CD Projekt is based. It makes margins for CD Projekt and 11-bit Studios much higher than from US-based video games companies. The effect is that the margins for Polish gaming companies are much higher. Activision Blizzard net margins are around 20 to 25%. For CD Projekt, that value is about 40 to 50%. This Polish game developer can sell 2 times less and achieve the same net income. CD Projekt Red is expected to have net margins above 50% for the 4 quarters after the release of the Cyberpunk 2077 game. Now you may understand why I prefer to invest in game developer companies from Poland than from the United States. Netflix's The Witcher TV series helps to sell more games in the Witcher universe. That is another aspect which will help in the climbing of the CD Projekt shares. Next, let's think about companies with high growth but which businesses are not operating in China. Facebook services, Facebook, Instagram, WhatsApp, are blocked in China. Similarly, YouTube and Google search engine are blocked by the Chinese government. Their main businesses should not be affected by a potential slowdown in the Chinese economy. Additionally, because these are the advertising businesses, Alphabet and Facebook will benefit from increased advertising caused by the US presidential election this year. I like companies with high profit margins, low or no debt, and high growth. These two FANG stocks meet all of these criteria. Both companies are not cheap. Their price-to-earnings ratios are around 30. Forward price-to-earnings ratio for Facebook is below 20, which is a bargain. The same ratio for Alphabet is at the level slightly higher than 26. The expectations for earnings per share growth are almost 20% for Facebook for the next 5 years and 9.7% for Alphabet. Both companies have plenty of cash on their balance sheets. The companies are buying back shares, which will increase the profits for the existing shareholders. Last week, Facebook published its quarterly financial results. The company beat the analysts' estimations in both metrics, revenues and earnings. Investors, however, were disappointed by the information about the higher than expected rise in expenses. Operating margins fell from 45% over 2018 to 34% for 2019. The next day, after publishing the results, the Facebook share price dropped 6.14%. I still consider Facebook to be undervalued. If you are interested in a more detailed analysis, I published a video where I went through more details about Facebook. The selected 4 companies are among my most significant stock market positions. I thought about what to do with my 5th choice from the last month. Tencent is still a very small position in my real portfolio. I would like to increase my exposure to the second biggest Chinese company. But with the current situation in China, I expect to see more panic selling of Chinese stocks. In fact, the business of Tencent should do well, while people stay indoors to reduce the chance of infection. Residents facing travel restrictions can still contribute to the economy via internet gaming or video streaming. Tencent owns social communications products WeChat and QQ, which have combined monthly active users of 1.2 billion. WeChat app offers its ecosystem of services, e-commerce, gaming, news, and payments. It is the most crucial smartphone app for everyday life in China. The next big portion of Tencent's business is gaming, which generates significant cash flow for the company. In addition, it has several other businesses, such as WeChat payments, Tencent Video, music content, and cloud. Just imagine a company which is like a combination of Facebook, PayPal, Activision Blizzard, and Netflix. So I will pass on choosing Tencent to my stocks to buy now list, but I will be interested in increasing my position in Tencent company if the price drops more. I am just not convinced the current price reflects all the negative news from China and the pace of spreading the virus. China is determined to get rid of the virus as soon as possible. Their preventive methods to isolate the source of the virus should have the effect on stopping the spread of the virus. So you know my choices for this month. My investing got better when I applied the following rule. Cut your losses, short, and let your winners run. In that way, you make fewer transactions and you do not try to time the market, By cutting your losses, you eliminate disappointing companies from your portfolio. In that way, your wrong choices do not prevent good companies from multiplying your wealth. But remember not to listen to bloggers and vloggers. Always do your research and have conviction why you buy shares of the specific company. Let me know, what are you planning? Do you have any money allocated in the shares of these companies? Did you sell your shares because of the fear for the spread of the virus? I wish you all successful investing in next month, and I hope you to become a better investor with every trade you make. If you enjoyed this video, make sure to subscribe to receive a notification about a new video being published, or feel free to add me on Instagram, Stocks and Freedom. Thank you so much for watching, and until next time, happy investing!